Ever wonder why your anchored VWAP levels get steamrolled while price magically respects zones you never marked? That's because you're seeing just one layer of the market. The Rolling VWAP channel changes that. It doesn't draw one line, it maps hundreds, then turns them into percentile bands so you can see where price is truly stretching, reverting, or magnetizing toward volume gravity. In this quick walkthrough, we'll show you how it works and a clever way to use it like a pro. Let's get into it. A VWAP is the volume-weighted average price, the true where money changed hands level over a span of time. Classic anchored VWAPs start at a single event, like the session open or a major low, and that's useful until market context shifts and your one anchor stops telling the whole story. Rolling VWAP Channel takes a different approach. It constantly starts fresh VWAPs at each new anchor interval. Think every hour, week, or month, then keeps them all updating in parallel. With many live VWAPs, we can measure their distribution and turn it into a readable channel with percentile bands. That means you're not guessing where fair value sits right now. You're watching a living map of it. When you apply the Rolling VWAP channel to a chart, you'll notice a smooth, color-blended envelope that wraps around price action. The central band reflects the median VWAP across the active set, while the upper and lower bands denote higher and lower percentiles of that VWAP distribution. The shaded outer zones highlight when price is pushing into rare statistical territory, and the dashed guidelines help track price interaction, providing context without visual clutter. The most critical parameter is the anchor period. This determines how frequently a new VWAP is initiated. For instance, every hour on intraday charts or monthly on longer timeframes. Shorter anchors adapt rapidly to price action, producing a more responsive and tighter channel. In contrast, longer anchor periods offer a steadier, more institutional perspective. Next is VWAP amount, which specifies how many concurrent VWAPs contribute to the distribution. Fewer VWAPs create a leaner, quicker reacting channel, while a larger number builds a broader and more statistically robust read. VWAP source defines the price input used for calculation. Common choices include HLC3. Most traders stick with the default, but switching to close can make the channel more reactive, while OHLC/4 often provides a smoother result by filtering noise. The percentile bands are where the real edge emerges. The median acts as a gravity line. The upper and lower bands, say the 70th and 30th percentiles, outline typical expansions and pullbacks. Meanwhile, the max and min bands capture the extreme ends of the VWAP distribution, ideal for spotting exhaustion points or identifying don't chase zones in trending markets. If you're in a noisy market, consider widening the percentile range. If you're seeking more frequent mean reversion cues, tighten them up. For visual clarity, gradient fill delivers the signature depth effect, making key confluences instantly recognizable. The show anchor option adds subtle vertical markers at each new anchor point, useful for orientation. For a cleaner presentation or better screenshots, anchors can be toggled off while retaining the dashed structure lines. Now that the visual structure and settings are clear, let's discuss how traders apply this tool. There are two high-probability use cases: a mean reversion approach that uses the median and percentile bands to time entries and exits, and a trend-following model that treats the median as dynamic support or resistance, while interpreting touches to the extreme bands as potential continuation signals. Let's look at a trend-following example. In this case, we're looking at Bitcoin on the 4-hour time frame, but to capture a broader view of the market structure, the anchor period of the rolling VWAP indicator has been set to the monthly time frame. The first thing to determine here is the overall trend. The simplest way to identify the long-term trend with this tool is by observing the lower bounds of the VWAP channel. If they're rising, it signals an uptrend. If they're falling, a downtrend. In this example, the lower bounds are increasing, so our bias is to look for buy setups. Now, markets often experience deep pullbacks, so deep that traditional tools like Fibonacci retracements or ATR-based channels might falsely suggest a change in trend direction. By using a rolling VWAP anchored to a higher time frame, we gain a smoother, more stable read on trend structure, making it easier to hold through these pullbacks without being shaken out by intraday noise. As the market retraces, our focus shifts to the median line. When price taps into the median, we'll need a secondary confirmation tool before entering. For that, we'll use the LuxAlgo Signals and Overlays Smart Trail feature. This dynamic tool adjusts automatically to price volatility, and it can be used not only to identify trend shifts, targets, but also to trail entries, making it an ideal companion for this setup. Now notice what happens in our first example. As price taps the median line, there's no smart trail change detected, and the market continues to move lower. The smart trail effectively filters out a false entry. But in the second case, after price dips below the median and then reclaims it, a smart trail shift occurs shortly after. That's our confirmation signal. Here, we can place stops below the smart trail and target the upper bound of the rolling VWAP channel. Here's a key insight. When price tests the upper channel and the smart trail remains unbroken, it often indicates a strong, accelerating trend. In such cases, maintaining the position can allow you to capture much larger profits, turning a good setup into a high risk to reward opportunity. And remember, this is just one way to use this tool. There are plenty of other powerful approaches, such as mean reversion setups, that can be just as effective. So go ahead and try out this indicator for yourself. It's available for free at LuxAlgo.com/library. If you'd like to take your setups to the next level, consider getting the LuxAlgo Signals and Overlays Toolkit at LuxAlgo.com, where you can try it risk-free for 30 days. Thanks for watching. Don't forget to follow us on X, and we'll see you in the next one.